Hello guys and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. In today's video we're going to be analysing the crude oil markets followed by the gold price chart. But just before I start today's video I just want to quickly talk to you about our streaming service that we have to offer here at Daily Market Movements. If you would like to become part of our private Signal group, then please head over to our website dailymarketmovements.com. That will then send you to this site that you can see in front. This is a site where we post more in-depth videos, so if you are a subscriber to our YouTube channel, that's fantastic. Thank you very much for your support. But you know, on a daily basis we are only sending out very brief short videos, where over here on our streaming service we are posting the full thing on a daily basis. We're posting 10 to 15 minute videos analyzing in depth our strategy and of course the certain various markets that we analyze here at Daily Market Movements. And of course, once you subscribe to our streaming service, you then gain access to that private Signal channel group over on Telegram. So for a very small fee of $399 for a year, it works out to only be around $33 a month. It really is just nothing. So if you would like to come and join our team, then please head over to our website. I've left a link in the description of this video. Let's start off with the crude oil market. Now, some fantastic news this morning. Of course, the US markets are shut due to Martin Luther Day. But the future markets are still open, and we have seen crude oil go up and achieve our take profit price of roughly $85 a barrel. This was a trade that I sent out over on the Telegram private Signal chat. So to everyone who had previously subscribed to our streaming service, we bought crude oil all the way down at $69 a barrel with our take profit up at $85, and you know, we've just gained 22.43%. So if this is not a reason as to why you should be part of our trading Signal team, then please, I do not understand what else we have to do. You know, that's a fantastic gain here. We've just gained 22.43% in crude oil. So, you know, fantastic to everyone who managed to capitalize on that trade. I've already received plenty of messages this morning of members of our streaming service, you know, explaining how grateful they are. So well done to everyone who managed to profit on that. And the big question is now, where does crude oil go next? Well, you know, I previously explained it was all about those fib retracements. If we broke above the 0.61, we'll then likely go and test $80. That's exactly what happened. And then where we was at $80 a barrel at that 0.786% fib level, I said that there will be two likely outcomes here. First one is that we just break straight above up towards $85, which of course marks the full extension of this fib retracement, or we will likely go back down and retest a 50-day EMA and then go and target $85 a barrel. And of course the first one played out rather nicely. We've just had that direct move up towards $85 a barrel, and we've just achieved our take profit. But the big question, as I just mentioned, is where does crude oil go next? Well, my answer, or my opinion would be, I believe that we will go up towards $100 a barrel, you know, especially the way that energy prices and inflation is going at this moment in time. I don't think that crude oil is done rising yet, but one thing I am very cautious about is this RSI. The RSI reading is now telling us that we are overbought. So what I'm looking for here is, you know, a pullback. You know, if we could get a pullback down towards $80 a barrel, this would be a fantastic place to add crude oil to your portfolios, and you know, that's what you could maybe think about targeting towards $90 a barrel as we do march up the stairs towards $100 a barrel. But that being said, could we see crude oil creep higher? Absolutely. You know, it might be, but I've just closed the trade here and we could see it go straight to straight to $90 a barrel. But I don't really care because I've just made 22.43%, and if I miss $5 from 85 to 90, you know, it wouldn't be the end of the world. I'm still in a significant amount of profit. You know, and being a retail trader, one thing that you have to understand is that it is incredibly difficult, almost impossible, to cherry pick the bottom of markets, and of course cherry pick the bottoms. Cherry pick the tops. So, you know, you have to be realistic to yourself and to your trading capabilities. Even some of the best traders in the world, like Warren Buffett, would have probably, you know, bought around 70. It's gone down to 62. Down here, he'd be kicking himself, but look what happened. It's gone back up, and now he's closed out at 85, for example. So it's very difficult to cherry pick and cherry pick the top of markets. So that's one thing that I'm just trying to share with you all here. So that's my current plan here for the crude oil markets, is whether we can get a pullback towards $80 a barrel. That's an area where I would be really interested in buying the the oil market trading up towards $90 a barrel, as I do anticipate us to see $100 a barrel by the end of Q2 2022. Let's move over to the gold markets. Now, gold, on the other hand, has had a fantastic week. Last week, we saw those massive gains at the start of the week. We went and retested 1830. Now, 1830 is a key area here for the gold markets. It represents the 0.382% fib level, and it's an area where we've really struggled to break above as of recent. And unless we can break above it, then I don't see 1877 coming into play anytime soon. But what makes gold really interesting at this current price level is look where we're trading. We are trading just above this downtrend we've been trading in for some time. But it's interesting to see we haven't had that explosive move towards the upside, and perhaps we need to break above 1830 to achieve that. But unless we see an explosive move up towards the upside here, that just tells me that the bears still have full control of this market, and we're yet to see it. I'm going to take this at the beginning of November for a perfect example. We saw a massive gain here in the gold markets, and you could consider that as an explosive move where we went and achieved 1877, but unfortunately it was a false breakout, it was a fakie, which sent us back in towards this downtrend. But here we haven't really seen a big explosive move. So at the beginning of November, we rallied a significant 6.11%, where if I take you to where we're currently trading now, yes, we've had a nice rally from 1780, but we're only up really 2.56%, and that's just really a good week. Really, that's not really an impulsive, explosive move that can confirm a breakout. It's not the movement that we're looking for here in the gold markets. That's what I'm trying to get at. So unless we break above that, I'm still bearish here for gold markets. We've kind of ignored the fact that we're breaking out here, and we are still trading very steadily. And as we go into this week, I'm looking to see whether gold can break back towards 50, or perhaps with 200-day EMA down around 1800. If we can break up below there, that's where we go and target around 1790, where that represents the bottom of this uptrend we've been trading in now since the beginning of October. And if we can break above that, I've got some more key levels to look out for. 1771, which is of course at 0.21% fib level, and if we break below that, that sends us all the way down to 1724, and then eventually 1700, which is my medium to longer term target. For those who are new to my channel, I have explained in previous weeks that gold had the perfect opportunity to go and trade above 2,500 to 3,000 back in 2020 to 2021. Everything fundamental was supporting gold. Never in the history have we ever had every single central bank around the world cutting interest rates down to pretty much 0%, and had the money that's been currently injected into the financial markets, into people's bank accounts with all these stimulus checks, all these business grants, etc. Gold had its opportunity to rally, and it hasn't really taken that opportunity with both hands. Yes, we did achieve a brand new all-time high back at the beginning of August 2020, but I was expecting a lot more. That being said, back during the 2008 and 2009 financial crisis, gold didn't go to achieve its all-time high until 2011, which of course was 2 years after the crisis. Now, of course, with COVID happening in 2020, well, then you could argue, well, hang on a minute, if gold achieved its all-time high 2 years after the financial crisis occurred, well, then that could potentially mean that we go and achieve a brand new all-time high in 2022. That's if history was to repeat itself. But at this moment in time, with gold still trading, but underneath 1830, I do favor the downside.